Sarbanes Oxley by Catherine Youngblood. This law also regulates the corporate responsibility and conflicts of interest and corporate accountability, although some unethical persons can find a way to slip something by the rules. With more regulations, it may help, but it will not solve the ethics problem. The regulation of Sarbanes-Oxley Act with tough provisions to stop any and punish any individual who commits corporate and accounting fraud and corruption. Some of these rules pertain to the following. Management's reports on internal control over financial reporting and certification of disclosure in periodic reports. Standards and procedures related to listed companies' audit committees. Strengths and commissions required regarding auditors' independence, disclosure in management decisions and analysis by off balance sheets, arrangements and negation contract obligations, disclosure regarding a code of ethics for senior financial and audit committee financial experts, certification of disclosure in company quarterly and annually reports. What is the Public Company Accounting Oversight Board? They oversee the audit of public companies to the subject of the security laws and related matters in order to protect the interests of the investor and further the public's interest in preparation of informative, independent audit reports for the company and securities which are sold to and held by and for public investors. What are some of the board duties? Setting standards to relate to audits and public trade companies, investing in public accounting firms and their employees, and conducting disciplinary hearings and impose sanctioned or justified. What measures does this act provide are the following. Creating an independent framework for the accounting profession, establishing protections from corporate whistleblowers, certified obligations of CEOs and CFOs. This will be used to verify CEOs and CFOs take responsibility for their company's financial statements and prevent them from delegating responsibility to other employees and then claiming ignorance when fraud is uncovered. Criminal Certification Section 906. Corporate officers who knowingly validate a certification requirements are subject to fine up to $1 million and up to 10 years imprisonment or both. Corporate officers who willingly validate these requirements are subject to a fine up to $5 million and up to 20 years imprisonment or both. Civil Certification Section 302. Based on the knowledge and financial records pertaining no misleading information. Based on the knowledge, the financial reports fairly presents all materials in the financial condition result in operations and money and cash flow for the company. They are responsible for all aspects of the internal controls and must state they have evaluated these within 90 days prior to the report. They have to disclose any material weakness in the controls or fraud. Management assessment of internal controls states management's responsibility of establishing and maintaining an adequate internal control structure and procedures for financial reporting and contains an assessment of the effectiveness in the internal control structure and procedures of the company's financial reporting. The standards of the Audit Committee Independence Section 301 of the Act require that the Audit Committee for each public trading company would be directly responsible for reporting and overseeing the work of the company outside auditors. Standards of the Auditor Independence. Accredital services, internal audit, put source services, broker or dealer or investments advisors or investments banking services, legal services, and expert services unrelated to the audit. Mandatory audit partner rotation. Section 203 relates to a lead audit partner or the partners responsible for reviewing the audit every 5 years. Section 206 eliminates them for allowing any auditor to work for a former client. Attempted conspiracy is a mail fraud provision in the United States Code from Chapter 63 to make an attempted conspiracy to commit an offense subject to the same penalty as the offense itself. This applies to mail fraud, wire fraud, security fraud, bank fraud, healthcare fraud, increasing the maximum jail term to 5 to 25 years. Security fraud is a crime punishable for the fines up to $250,000 and up to 25 years in prison. Documentation destruction is making and destroying evidence, the obstruction of investigation, or any matter within the judicial system in any U.S. department legal and punishable, and a fine up to $250,000 and up to 20 years in prison. Freezing of assets is a security violation by a public trading company and its officers, directors, partners, agents, controlling persons, or employees by the SEC is petition a federal court to issue a freeze for all payments and preceding persons. When looking into financial statements, fraud reports, this is what you're looking for. Financial statement fraud generally takes one or two forms: overstating assets or revenue, or understating liabilities and expenses. Transparency and equality will help greatly in restoring the faith and trust in financial information.